Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, November the 18th. The year's 2024. Let's talk trading. Weekly, open, and gap. As always, these videos are for educational purposes only. Your results may differ from mine. Risk management. Always, always, always have your risk management in place. Never lose more than you are willing to lose on any one single trade. So let's go ahead and take a look at the weekly. And all the gaps have filled, and looks like just about every pair except for a couple gap down. And those spreads were probably way out of whack. If we zoom out to the monthly, we can see that the pound dollar is 271 pips below the monthly open, 422 off the monthly high, and 28 off the monthly low. Going back to the weekly, we're 19 pips above the weekly open, 16 off the high, and 20 off the low. So an anemic day so far, only 36 pips of range. And you can see here, we had actually broken out of the opening range for the year, but we are now back inside that opening range, and we're putting in the opening range for the week. And speaking of the year, we are 86 pips below the yearly open, 808 off the high, 327 off the low. And if you look left, you can see we're in these monthly wick zones here from what? 1, 2, 3, 4, 5 months ago. So this is a very critical area. If we lose this area here, we're going to probably come down to around, let's see, 2492 area, right around here. So we'll have to see what happens. And there's not much red news until, or there's no red news till I think Thursday and Friday. And just a heads up, I won't be around Thursday, Friday. I got some things I have to do. You know, we talk about balance, you know. Trading isn't the only thing we do in life. At least it shouldn't be the only thing we do in life. There's a lot of other things to do. So you can see these inside bars. There was a monthly inside bar 10 months ago. There was a weekly inside bar 34 weeks ago. And we're below the daily inside bar from 6 days ago. But the way today is going, it's possible we have an inside bar today. And there's a handful of inside bar action according to the dashboard. So we've got a few pairs over 100 pips, and they're mostly yen pairs. The pound is only at 36 pips. This is just ridiculous. I mean, look how many pairs are beating the pound in range that normally don't. I mean, the New Zealand US dollar has 40 pips in range, and we only had 36. This is just some anemic. And then the euro's beating the pound at 42 pips. It's just crazy. Makes me want to go back to trading the dollar yen. Okay, weekly open. We crisscrossed it a couple of times here, but that was it. And you can see looks like we're putting in lower lows and a flat bottom. That tells me to look for shorts. The range is too low for rats. I mean, they're just bumping up against each other. It's ridiculous. Bambino flex indicators had to go short. Bias near the pivot is short. Pivot was at 26.37. Prices failed to close above it on H4. You can see that. Okay, for pivots, we missed the weekly, we've taken out the daily, and we've taken out the monthly. So weekly, 27.13. 4 is what we're looking for. We're 90 pips away from it. No, this month so far, 1, 2, 3, 4 days in a row, we missed a pivot. That's only happened once in the last 250 days. Actually, in the last, no, I've got this at 1,000. The last 1,000 days, it's only occurred once. And you can see it only missed it by 2 pips. We had a 6 pip miss, so a couple of small misses, but still misses from the statistics. Okay, we've been in and out of the lower wick zone a bunch of times in the past 8 hours here. And you can see once again, price doesn't like staying in that wick zone. 36 pips, there's nothing here to note. Inside bar. And I had a trader tell me that these charts have too many indicators on it. This is the price action simple chart. I'm not sure how many indicators. They said something about have a single indicator. These are just horizontal lines. Okay, we do have indicator 2. Got the previous H1 high low. This is an M30 chart. Notice I do believe that covered or just about covered. And in fact, before the video, I was long. We just broke out of that M30 previous low. And we do have inside bar, outside bar, color coding. And this stripe, that's just the H1 open, I do believe. So that's just the price meter. So, and then we have the smart range. So I'm not sure if this is too many indicators, you know, whether or not it's making a new high or new low. Bar 1. You know what? I'm not sure what bar 1, what that multimeter is. Oh, that's inside bar. Yeah, inside bar, outside bar, higher high, lower low, basically state change. And then we have the higher, low, lower, high chart. Oh, wow, that would have been a nice trade right there when it came across this previous 3-ball level. So these are once again horizontal lines with the 3-level ZZ. The only other indicator here, we've got the lower high, higher low indicator. We've got a and we've got the fibs turned on. And yeah, it might look kind of busy, but once you get used to those horizontal lines, you see them, but they don't bother you. They're just basically here. They're either triggers or targets. So if this might I'm not sure if this one's too busy for that trader. So what I did was I've been working on a new indicator, call it the price turn wick zone. So what's a price turn? It's basically a flip-flop. And as I noted way back years ago, every trend starts with a price turn. You can't show me one that doesn't. It has to. Otherwise, it's still going the other way. So sooner or later, if the price is going up, it's going to have a red candle to signal direction change. And so you have a price turn, you have continuation. So what this does is this paints this indicator, price turn wick zone, paints the wick zone. So you see this turn. And so what happens is price will sometimes come back to that area, not necessarily all the way through it, but it'll come back, and there's your re-entry. Now, a lot of times, that's similar to the market structure traders who talk about order blocks and imbalance. But to me, this is just a simple price turn, and you can see how it just happened right here. You had a price turn, price went up, take your pips. Otherwise, price came back down into the turn, into the price turn wick zone here, and then shot back up. And I've got my candle color multimeter. Now, what I do is, if I were to take this trade, I'm going against all this red. I'm in and out for a pip or two. But the thing is, you can do this repeatedly. You can see right here, we got in that level. We got 8 seconds. And so let's see what happens on the next candle. And if this were to come back down into here, since it hasn't wiped this area out, because if it wipes it out, in other words, if it goes through it, if this one or this one goes through it, then this gets erased off of the chart. So let's just see what happens. So you'd be going long in a sea of red. I read something yesterday that had nothing to do with trading, but it says sometimes if you change your time horizon, it gives you a different perspective on things. Let me see if I can find that quote real quick. Yeah, it was from James Clear. Let's see if I can find it real quick. No, maybe it wasn't the James Clear quote. Let's see. I'll have to look it up. Huh. Maybe it was. Nope. I'll have to look it up. But as you can see, we got into the price turn wick zone. It touched this one. And now, depending on where you got in, there's another 2 pips to be had. Right there. And you noticed how we had a price turn wick zone, but it exceeded it, so they got wiped out. So, fellow traders, let me know if you have any questions. And the one trader that says, too many lines on the chart or too many indicators, let me know if that helps at all. And as always, if you have any questions, feel free to put them in the remarks or replies here on the videos. And I want you to, have a nice trading week, profitable trading week. And please always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.